JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 28th of July 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at yesterday, just to see how everything is getting along. But yeah, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one actually I want to pick up here is Nikkei 225. So just a quick update. So I talked about this one yesterday and actually from the beginning of this week, but what I said that if it stays somewhere above this 27,795 territory, then there is a chance for a nice little rebound here and a push higher. However, as you can see, the index fell below this hurdle and drifted lower to closer to the 27,385 territory, the one that I kept talking about lately, and that's the lowest point of May. So we came very close to it. The index is already closed, of course, but yeah, yesterday's decline in the U.S. equities kind of spilled over into the Asian session as well. So as you can see here, Nikkei drifted lower. However, it still managed to stay above that 200-day EMA together with that 27,385 territory right here, the highlighted one. The downside scenario still remains the same. I need to see a break of this area, and then yes, this would confirm a forthcoming lower low, and potentially more sellers could join in. So for now, like I said, that's the game plan here. But if by any chance we manage to climb back above the 27,795 territory, then yes, this could increase the chances for a possible move higher. However, this time what I'm going to be looking at here is I'm going to keep an eye on the current highest point of this week, and and that's roughly here. Let me just quickly capture the high here. So yep, that's going to be this one here. It was reached on Monday, and that's roughly around the 28,036 territory. So if we clear that level, if we break above that level, then yes, we could go for a bit of an up move here. Now jumping into Shanghai Composite, and yeah, the index drifted heavily to the downside. Again, it followed suit, and as you can see yesterday, for example, the index did decline heavily here. Yesterday when I was talking about the Shanghai Composite, it was still trading just kind of near this 200-day EMA, but it fell below it and stayed below it, and actually managed to, on the way lower, it managed to also clear up some of these support levels, where it ended up even actually falling slightly below the lowest point of March. Now let me just double check very quickly if this is the lowest point. Yep, that's that was the lowest point of this year, guys. This one right here, the lowest point of March, and that's near the 3,328 level right here. So we managed to briefly fall below that hurdle today, but as you can see, the bulls are pushing the index back up. So can they keep it above that area? Well, so far they're doing a good job, and they are keeping above that the index above that level. But certainly this level is going to be one of those to watch, because again, this is the current, well, actually it was the previous lowest point of this year. Today the index managed to test the area near this level. Let me just quickly put this one on the chart, near the 3,313 mark, approximately around here. And yep, and now we're got back to the 3,373 territory, which is marked by the low of the I think that's the lowest point of April. There we go. So yep, that's the lowest point of April. So currently we're getting a slight little hold up here. I mean, previously it was seen as support. Now it's acting as resistance. So yeah, we have around 50 minutes left of trading here on the Shanghai Composite. So let's see where we're gonna stay. But if we manage to climb back above that lowest point of April, then we will consider maybe a bit of a corrective move here to the upside, and then we'll take it from there, guys. Seng index, so also drifted to the downside. However, as you can see, it's kind of performing a little bit better than the Shanghai Composite. Yeah, the index, as you can see, it drifted lower. Yesterday I talked about this area, the 25,093 territory, which we managed to reach. Not only that, we also managed, well, we actually overshot that area, and we've tested the 24,700 and, well, let's round it up, 4950 territory right here. So that's where the little hold up occurred. Again, if this hold up here continues, then way up, this idea here could still work out, where we could see a nice rebound here and a push back to the upside. Initially I'll be aiming for that 26,000 territory to see if that's going to act as a somewhat of a resistance or not, and then yeah, we'll take it from there. But at the moment, keeping an eye on this area. If we drop below the 24,749 territory right here, then yes, we will aim for lower levels. Then we will target the low of the 30th of October here near the 24,030 zone, and then we'll take it from there. But at the moment, guys, like I said, it's an interesting one. We are near a very important area of support. If we can get a hold up somewhere around here, then yes, a nice little rebound back to the 26,000 territory could be possible. Quick update on the German index, DAX. Yep, also drifted to the downside yesterday. Didn't really decline strongly during the trading hours, but after hours, the cash index did push heavily to the downside. And at one point, of course, it did manage to recover. Now currently the cash index is trading at around 15,540 zone, so slightly above the yesterday's close, but still below the 21-day EMA. So let's see how that's going to play out, because if it climbs back back above the 200-day EMA, then yes, we could consider maybe a bit of a maybe a move higher here again, but however, I mean, I would still prefer to see maybe a push above the current highest point of this week, near the 15,681 zone, in order to get a little bit more comfortable with the upside. So just like I said, just a slight little precaution here in terms of the upside. For the downside, well, I mean, it's going to be an interesting one here. So I'm keeping an eye on this 15,456, but I think that this level needs to be adjusted. I thing. However, well, I mean, let's keep that one for now, because this level did act at a few times as a strong area of support. If we drop below this area, then yes, we could consider maybe a bit of a larger correction here towards the upside support line taken from the low of the 19th of March of last year. The S&P 500, so the index did drift heavily to the downside yesterday, and it did decline, however managed to close the day and stay above this 4,393 territory, and that marks the high of the 14th of July, guys. So you can see that we have created a new all-time high. Let me just zoom in here a little bit, I think. Let me just put it this way. There we go. So we did create a new all-time high and hit the area near the 4,423 zone, or 22 at least. But yep, so just fell shy by a few points from hitting that level, the 4,423. But basically, for now, I would say that let's be very careful, because currently the cash index is trading still above this hurdle, above the high of the 14th of July, and if we continue to do so, we might see a nice reversal here and a push to the upside. But if you want to be a little bit more careful, then certainly wait for that confirmation break above the 4,422 territory right here in order to get a little bit more comfortable with the upside. For the downside, now this is where it's going to be interesting, because basically what I'm going to stick to here is I'm going to stick to this little high of the high of the 22nd of July. So basically that's the last Thursday's high here, and you can see that yesterday the index found support near this level, near the 4,370 territory. So if we drop below it, then we could go for a test of the 21-day EMA, or even this upside support line taken from the low of the 19th of May. Now jumping into DXY, the dollar index drifted to the downside, and yep, we have drifted lower and stayed. We first of all, of course, hit the target, the 92.51 zone. We also hit the 21-day EMA as well, which we broke a little bit here, as you can see, but we managed to remain above that area, above that 21-day EMA. However, this is where the tricky bit comes in, because we're still above the 21-day EMA, but that 92.51 territory continues to act as a good area of resistance. So if it continues to do so, then we might see maybe another slide here, especially if it falls again below the 21-day EMA. So keep that one in mind. For the upside, I would need to see a push back above this upside support line, which it broke yesterday. This upside support line is taken from the low, the 25th of June. And if we push back above it, then there is a chance for a push towards the current highest point of July, which I think that might stay like this for this month. But for now, I mean, like I said, we'll keep an eye on this upside line, and if we climb back above it, then yes, we will aim for that highest point of July, or even above, we'll aim for some higher levels. But again, at the moment, we are considering here maybe a bit of a corrective move, a further corrective move, especially if the index stays below the 21-day EMA. Now jumping into gold very quickly, gold is of course enjoying the moment of a weaker dollar, and yep, it's pushing higher, and also the fact that yesterday's trading turned to kind of risk-off trading. So yep, that kind of gave the boost here for gold as it picked up in buying interest, and we're now back to these EMAs again. Now still, if I want to aim for the upside, I need to see a push above that 1814 territory right here. But again, we're not really getting that yet, so that's why we will be a little bit on the careful side. For the downside, we need to see a drop below the 1790 territory in order to get a little bit more comfortable with the downside. Now jumping into WTI oil, guys. So we continue to trade. Above above the 21-day EMA, although yesterday we saw another drop below the 21-day EMA, but you can see it quickly kind of came back and it pushed to the upside. Yesterday we got the from the US we got the core durable good orders, so yep, those have declined a little bit here, so I mean, that gave kind of a bit of a boost here for the oil market, and of course we'll keep an eye on the further data, especially for the crude oil inventories today from the US. So keep that in mind. If those decline, then yes, we could see oil pushing higher. If the inventories kind of start dropping, then yes, like I said, we could see a nice good push back here to the upside. But from the technical side, so far, this idea that I've drawn here on the beginning of this week and the last week as well is still working out. Ethereum, very quickly on Ethereum, so we are, yes, we pushed higher, that's great, so we managed to climb back above that 2000 territory after we found support near the 1700 level. However, the crypto is actually seeing some resistance right now near this downside resistance line taken from the high of the 20th of May. So in a way, if we continue to struggle to overcome this downside line, then, well, I mean, maybe another slide here could be possible, so keep that in mind, guys. But again, like I said, let's see how this is going to play out. For now, I am going to take a bit of a cautiously bearish approach on this one. However, if I want to aim for the upside, then yes, of course, a break of this downside line is needed. Jumping into a few pairs, AUDNZD, guys, so beautiful rebound from this territory here, the 1.0541 zone, approximately around here. That's the lowest point of this year, guys. As you can see, this area continues to provide support, and let's see how long will that last, because again, if the situation changes, if the markets start drifting lower, then basically the equity markets start drifting lower, then basically Australian dollar might take a bigger hit than the New Zealand one. So let's see, of course, how this is going to play out, but for now I'm leaning a little bit more towards the downside, but I would still need to see a break and a drop below this 1.0541 territory in order to, let's say, get a little bit more comfortable with the downside. With the upside, I need to see a push above the 1.06 territory here in order to consider a larger correction to the upside. Jumping into AUDCHF very quickly, so here we need to readjust a few levels. First of all, this is what we need to mark here. We need to actually keep an eye on this low, the 29th of December. Previously, I was keeping an eye on the lowest point of this year, which we managed to overcome. And now I'm keeping an eye on this low, the 29th of December, which, as you can see, is providing good support. And that level is roughly around the 0.6719 level. So if we nicely clear that level, then yep, we could consider some further declines. This would confirm a forthcoming lower low, and more sellers could join in and potentially drag this one towards the 0.6655 territory right here, which, as you can see, acted as a very nice area of support as well back on the 15th and the 21st of December. For the upside, well, we need to see a push back above this hurdle, above this, not this one right here, let me just get rid of this one, but a push back with a 0.6782 territory, and then yes, lower levels, this could lead to a bit of a larger correction here to the upside towards this downside line, and that's where I'm going to aim initially for, also for this 200-day EMA, which is near the 0.6868 level, and then we'll take it from there. But that's, like I said, in case of the upside. Jumping into USDCAD very quickly here. So, yep, we had a nice little rebound yesterday, but as you can see, the pair managed to get a hold up near this 200-day EMA, and as I said to you before, that if the 200-day EMA continues to provide resistance, then we could see maybe a test of this upside support line taken from the low of the 9th of June, and so far it's kind of it's not tested yet, so let's see if we can do that, but for now we're keeping an eye on the 200-day EMA. If by any chance the pair starts pushing back above this 200-day EMA, then this of course may attract more buyers here. We could start maybe aiming for the not for this level, but for the highest point of July here again near the 1.2807 territory, and then we will go further from there. But again, like I said, in order to consider maybe the upside here, again, then yes, a nice good strong push above the 200-day EMA would be needed. Quick update on GBPAUD. I talked about GBPAUD yesterday, and I mentioned this level here, the 1.8762, and I said that if this barrier continues to provide resistance, that's the high of the 20th of May of 2020. If it continues to provide resistance, then yes, another correction here to the downside could be possible. But as you can see, it overcame that barrier and stayed above that barrier. So now my next target is the 1.8993 territory right here, not far from that psychological 1.90 zone. But of course, don't get me wrong, we might see maybe a bit of a corrective move here lower, and if the hurdle here that I looked at previously as a resistance, and now if it's going to act as a support level here, then yes, a nice good push back to the upside could be possible. Okay, so basically now so yeah, that's the kind of the situation here on GBPAUD. GBPNZD here, looking at this picture, you can see that we have approached the key resistance level near the 1.9960 territory right here. So that's the high of the highest point of June. We have tested that level here in July as well, and then kind of drifted back down. But as you can see now, the bulls have managed to push the pair higher again, back to this hurdle, and now let's see if we can actually overcome that. So far, this area is acting as a good resistance level. If we can manage to stay above this area, then certainly yes, we could this could attract more buyers. This would confirm a forthcoming higher high, and yep, then the pair could start moving further north, and the next target here could be this one right here, the highest point of August of last year, near the 2.0271 zone, and yeah, this could be a nice interesting target here. Of course, on the way higher we do have that psychological 2 zone. We'll keep that one in mind, of course, because in a way it could push further north, for example above this barrier, the highlighted one, and it could test that psychological 2 zone and then drift back down. So we've seen these kind of beautiful numbers working out sometimes nicely, so yeah, keep that in mind. But again, for now it's looking quite positive here, but we need that confirmation break first. For the downside, I would say we need to see a drop somewhere below this 1.9792 territory right here in order to consider maybe a bit of a larger correction to the downside. Quick update on euro against the Turkish lira. I've talked about this pair recently, and I do like to look at these exotic ones sometimes. So yep, it seems that we are forming somewhat of a descending triangle pattern. But again, which of course tends to break to the downside. However, until we get that break, we cannot really get comfortable with the downside yet here. So so wait for a violation of this highlighted territory, which is the lowest point of June here near the 10.0490 level, approximately around here. And yep, if we clear that area, this will confirm a forthcoming lower low, and my next target could be this 9.85 zone. And finally, EURUSD. So yep, weak dollar helped push this pair a little bit further north, as you can see. But we managed to overcome the 1.1830 territory, but we managed to stay below the 21-day EMA. And look how well that EMA acted as a good resistance level. So for now, I'm keeping an eye on this barrier. I need that confirmation break above the 1.1830 and a push above that 21-day EMA in order to get a little bit more comfortable with the upside. So let's see how that's going to play out, of course, but for now I'm leaning a little bit more towards the upside. But as I said, I need that confirmation break in order to get a little bit more comfortable with further upside. So guys, that's it for the session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views, really do. So thank you very much for that. And if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, and I'll see you later. Bye-bye.